G'day guys, Seeney here and welcome to another episode on the Australian Wealth channel. And in this episode, I'm going to talk about my top stocks for 2022. So thank you guys so much for watching. Please make sure you like and subscribe to the channel. It really helps to get these videos out to more people. So in this video, I'm actually going to try and do this all in one take because business is insanely busy at the moment. So I need to make sure I keep up with all that work. But I wanted to go through some of my top stock picks for 2022. Now, none of these are a buy recommendation. No one should be doing any investing just based on my word. You need to do your own research when it comes to stocks. You need to look at things like revenue growth, price to sales, net income growth, all of these other different metrics. So just because I say it's good and I think it's good, doesn't mean it might not necessarily be the right investment for you. But nevertheless, I'm going to talk about some of the companies that I am most interested in going forward in 2022. So I'm going to start with my absolute top stock, and then I'm going to work my way through some of the others which I also think are going to perform incredibly well. Now, the first stock that I want to talk about was Voyager Digital. Now, this is one that I've talked about on the channel before quite a lot, and it's one that I think personally is going to perform incredibly well going forward into the future for a number of different reasons, including the fact that their revenue growth is just insane. And on top of that, the margins for this particular company is absolutely ridiculous. So much money that this company is generating is going straight to the bottom line. And that is fantastic when you're looking at investing in a company, especially in the crypto brokerage space. You want to see a lot of that money going straight to the bottom line. And this is definitely the case for Voyager Digital. So much of that money is going from the revenue straight to their bottom line, which is fantastic. Now, this is a company that's growing users at a drastic rate, and the revenue is growing in insane amounts. So it's one that I'm really interested in because it still has quite a small market cap, only around $2 billion. So at this point, there's a lot of room for growth. If Voyager does even half as well as a company like Coinbase, we're seeing some insane numbers going forward for this particular stock. At the moment, the stock is around $13 Canadian, I believe, a share. But going forward, if they can execute and get half as good as what Coinbase has, we're looking at a stock price of easily $120 to $130 if they can execute, which they have been doing. Now, this is a company that also has multiple different growth vectors. They're moving into a number of different spaces. It's not just the crypto brokerage side, but it also includes payments, and they're also going to be moving into stocks going forward, which is really important for any company, to have multiple different growth vectors. Now, the management team for Voyager Digital, fantastic management team. That's incredibly important when you're looking at investing in a company, is that the management team knows what they're doing, and this is a very experienced management team with Stephen Ehrlich at the helm. So that is my top one for 2022. Now, moving on from that, there's a couple of stocks that have been absolutely slammed that you might have seen in the last 6 months. Now, this is anything that's small cap related, anything that's not really that profitable, and anything that is a growth stock but losing money. So there's a couple of these companies that I'm actually invested quite heavily in at the moment, Voyager Digital being the first one. And the second one that I'm also invested really heavily in, just in the more recent times, is Affirm. Now, some of you guys might have heard of Affirm before. Some of you guys might have heard of Afterpay before. Well, Affirm is very similar to Afterpay. It's in the buy now, pay later space. So it's basically like credit cards, for lack of a better term, but there's more favorable terms for people that are using the service. So Affirm is one that I'm actually quite interested in. This one has a market cap of just over $20 billion. So it's not a small cap stock. We're looking in the mid cap range for this particular stock. Now, the reason I'm really interested in this one is because of some of the deals that they've been doing. Now, with Affirm, they of course have a very, very high revenue growth rate, which I think is very important. But they also have just had a partnership that has formed with Amazon, where you can do buy now and pay later through Amazon. So I thought that was really interesting. And with the volume of sales that Amazon does, this is potentially a very profitable partnership for Affirm. So this stock was trading for about $160 a share at the peak, but since then it's actually dropped down to under $80, I believe. So it's a very drastic drop. And when I started to see it go under 100, it was a point where I started to get really interested in buying this one, because generally my investments are elsewhere, but I don't generally tend to invest in the buy now, pay later stuff. But the valuation of this has just gotten so low that you just can't ignore it. So for me, this was one that I had to pick up. So Affirm is one that I'm really interested in for the future. Now, moving on from that, as I said before, there's a lot of companies that have been beaten down recently, and what that's done is created a lot of deals in the stock market. And one deal that I wasn't initially going to buy, but you know, we've seen what's happened to a lot of stocks over the last 6 months or so, is one that I just had to buy because the deal got too good, and that one is Corsair Gaming. Now, for those of you that don't know, Corsair Gaming is a gaming company, has a lot of hardware products to do with computer gaming. You might have seen some of their RGB RAM sticks and things like that. So this is a company that's been around a long time. They're a profitable company, and they're growing at not the fastest rate, but they're still growing very consistently, which is great. This is a company that's been hit a lot with some of the supply chain issues and inflation. That's compressed some of their margins. But going forward, I think a lot of the inflation issues are going to subside, because the really important thing to note is inflation is probably not going to be anywhere near as high, because we've seen a 7% increase year over year. And to see that again, you know, that's just going to become unsustainable. So I think that inflation is going to chill out, and this is going to be good for Corsair Gaming. So initially when I was looking at this stock, it was around $30 a share, and I thought, oh, it's okay. It's an okay deal. But since looking at the stock at that price, I've seen it go all the way down to $20 a share, you know, at just levels that it shouldn't really be trading at, personally, I believe. But at this point, you know, I really just needed to pick up some shares because the deal was too good. So this is very much a value play. It's not one that I'm expecting to grow huge amounts into the future, but I think with Corsair Gaming, it's one where you can see consistent growth over time. And I think that, you know, give it 5 years, 10 years, is gaming going to be bigger or smaller? It's definitely going to be bigger. I mean, that much is obvious with the way things are going with the metaverse and computers becoming even more part of our lives. So Corsair Gaming is one that I'm really interested in for the future. And of course, the final stock that I wanted to talk about today is, of course, the Tattooed Chef. Now, anyone that's been following the Tattooed Chef knows that if you've been looking for short-term gains in this stock, it's been an absolute disaster. The stock has continued to dip and dip and dip very drastically. Now, there's a number of different reasons for this, but one of the main ones is that basically all of the small caps that are unprofitable especially have been absolutely crushed lately. They've been the hedge against inflation. So unfortunately, we've seen a lot of people selling out of Tattooed Chef, but for me, that makes the deal so much sweeter. I was interested at 20, I was interested at 18, I was interested at 16, and you better believe it, I was even more interested at 13. So I've been picking up shares this entire time as the stock has been dropping. So I think over the course of 2022, as this company proves itself and continues to grow revenues at a massive rate, you know, we're looking at revenue growth over 40%, which is fantastic. As they continue to do that over time, then this is one that is going to start getting respect from Wall Street. They're expecting to be profitable not in 2022 but in 2023. So you can guarantee in the lead up to that there's going to be a lot of people that are now quite interested in this stock. So it's one that I'm holding for the long term. That is what I have said for a very long time. So the fluctuations for a year or two don't bother me so much. I want to see that grow very consistently into the future, which I personally believe it will. I'm expecting this stock over the next 5, 6, 7 years. Who knows? You know, it's a long time, but who knows? I'm expecting this stock to grow to at least $110 a share. It's certainly a long way off, and the company needs to do a lot of execution to achieve that goal. But they have a great team there with Sam Galletti, who's been growing the company very rapidly, and it's one that I'm excited about going forward. It's another space that is growing at a massive clip, the plant-based space, and I am very happy to be part of that movement and to be able to make some more cash off that. So I hope you guys found this video interesting. Please make sure you like and subscribe to the channel. It really helps to get these videos out to more people. If you'd like to get yourself a free stock, I have a link to Stake in the description. You can start your investing journey, chuck some money in the brokerage, and you get yourself a free stock. If you'd like to track your net worth, I have a link to WeMoney as well. It's the net worth tracker that I use, and it's phenomenal. It does such a great job, hooks up to all your accounts, so you can see where your financial position is. So remember, none of these stocks I'm recommending that you should buy. They're stocks that I'm really interested in, and the stocks that I like to talk about, but of course you need to do your own research before you buy anything. So thank you guys so much for watching. Like and subscribe. We'll see you later.